Calgary sellers are discovering 30,000 to 40,000 shortfalls after the sale. Some Calgary homeowners think selling the house will solve the problem, but when the numbers are added up, they are finding out something painful. The sale price may not be enough to pay the mortgage, not enough to pay the condo fees, not enough to pay the property tax, not enough to clear a lien, not enough to cover legal fees, not enough to cover selling costs, and in some cases, the seller may still be short 30,000 to 40,000 just to get out. That is not selling for profit. That is selling to stop the bleeding. If you are a Calgary homeowner, especially if you bought recently or you refinanced or you are behind on payments or you own a condo, townhome or investment property, this video may be very important for you because the biggest mistake is not always selling. Sometimes the biggest mistake is waiting so long that selling no longer solves the problem. Quick disclaimer, this video is for education only. Every situation is different. If you are behind on payments, facing foreclosure, dealing with a lien, thinking of selling, or trying to refinance, talk to your lender, lawyer, accountant, mortgage professional, and a qualified real estate professional before making a decision. Now, let's talk about the problem. Many homeowners think equity is simple. They say, my home is worth this and I owe that, so I should have money left. But that's not the full math. When you sell, you do not just pay the mortgage. You may also have to pay a mortgage penalty, property tax owing, condo fee arrears, special assessments, legal fees, real estate commission, GST on commission. You may spend money repairing stuff, staging, cleaning, moving cost, debt tied to the property, and sometimes liens. So the real question is not what can I sell for? The real question is what is left after everyone gets paid. That number can be very different. And this is where some homeowners are getting shocked. They thought they had equity, but after the full payout, they are short maybe 25,000, maybe 30,000, maybe 40,000, sometimes more. And we have seen more. If the home is also not cash flowing, or the owner is behind on payment, or the bank is already sending letters, the pressure gets worse fast. Now, let me say this clearly. The market does not care what you paid. The market does not care what you owe. The market does not care what you need. The market cares about what a buyer will pay today. That is painful, but it is true. If similar homes are selling lower, your home may have to compete. If buyers have more options, they may negotiate harder. If your property type has more inventory, you may not have the power you had 2 years ago. If your home needs work, buyers may discount it. And if you are under pressure, time may not be on your side. This is how a seller can feel trapped. They want to sell, but the sale price is not enough. They want to hold, but the monthly payment is too high. They want to refinance, but the income, credit, or property value does not support it. They want more time, but the bank is asking for action. That is a hard place to be, and this is where early advice matters. Not because anyone can make the market do what you want. No one can, but because the earlier you look at the numbers, the more choices you may have. Now, here is the situation that you want to consider carefully. If you are waiting because you are hoping prices will bounce back quickly, you need to be very careful. Hope can be expensive. Hope does not pay arrears. Hope does not stop legal fees. Hope does not repair credit. Hope does not make a lender wait forever. A plan does. So what you should do if you are worried about a shortfall, number one, find your real market value, not the number you want, not the number your neighbor listed for, not the number from 2 years ago, not the number you need to break even. You need recent sold data. Homes like yours in your area with similar size, condition, age, style, and property type. Listed price is an opinion. Sold price is evidence. Use evidence. And number two, get your mortgage payout statement. Do not guess. Call the lender, ask for the current payout amount, ask about penalties, ask about arrears, ask about legal fees if the file is already in default, ask what must be paid to bring the account current. This number matters because your online mortgage balance may not tell the full story. Number three, add all property debt. Do you owe condo fees, property tax? Are you owing special assessments? If it's a condo, you back on utilities, insurance? Are you owing CRA, a private lender, a lien holder? Are you owing anyone else? Put it all on paper. Do not keep the numbers in your head. Your head will protect your feelings. Paper will show the truth. Number four, add selling cost, legal fees, realtor fees, GST, repairs, cleaning, moving, possession adjustment, possible mortgage penalty, everything. Everything. There's so many that, but once you put them on paper, you get to know the exact number. So you need the net number, not the fake number. Number five, compare your options. Can you keep the property? Can you refinance? Can you sell? Can you rent it? Can you bring in a family support? Can you make a payment plan? Can you negotiate time with the lender? Can you sell before the bank takes stronger action? Each option has a cost, but doing nothing also has a cost. And usually that is the most expensive cost. And many times doing nothing is the most expensive option. So now let's talk about the bank. If you are behind on payments, do not hide. Do not ignore letters. Do not ignore calls. Do not ignore emails. When the lender sends a serious letter, the clock may already be moving. If you respond early, you may have more options. If you wait, you may lose options. And once the process becomes legal, cost can rise, time can shrink, stress can explode. Some homeowners wait because they are embarrassed. I understand that. Nobody wants to say, I'm struggling. Nobody wants to call the bank and explain. Nobody wants to tell family the payment is too high. But silence does not protect you. Silence usually makes the problem bigger. Early action is not weakness, early action is wisdom. Now, let's talk about selling and renting. Some people hear this and say, I do not want to sell and rent. I understand. For many families, home ownership is emotional. It means stability, pride, a place for children, a place for family, a sign that you made it. Especially for immigrants and newcomers, owning a home can mean a lot. So I'm not saying sell lightly. I'm not saying that lightly, but you have to ask the right question. The question is not, do I like renting? The question is, which option leaves my family stronger 12, 24, and 36 months from now? If keeping the home destroys your credit, drains your savings, adds more debt, and keeps your family in stress every month, then keeping may not be strength. It may be bleeding. But if selling creates a huge shortfall and rent is not much cheaper, then selling may also be difficult. That is why this must be a numbers decision, not a pride decision, not a panic decision, a numbers decision. Now, for investors, if your rental property is not cash flowing, review it now. Do not wait until one bad property damages your whole portfolio. Ask, how much am I losing every month? What is the real rent today? What is the vacancy risk? What is the mortgage renewal risk? What is the true sale value? What is the payout? Is there equity? Can this be fixed? Or am I throwing good money after bad? A property that only works with perfect rent, perfect tenant, perfect rates, and perfect appreciation does not work. That is not investing. That is hoping with a mortgage. Now, for first time buyers watching this, there is a lesson here. When you buy, do not only ask, can I get approved? Ask, if I had to sell in 2 years, will I be trapped? That one question can save you. Buy a home with resale in mind. Buy with emergency savings. Buy with a payment you can carry. Buy in a location with strong demand. Be careful with high condo fees. Be careful with too much debt. Be careful with relying on future appreciation because the people struggling now are not all careless. Many just bought with no margin for error, and then life happened. So here's the main takeaway. If you are thinking of selling in Calgary, do not guess your equity. Confirm it. Get a real sale value, get a mortgage payout, add the condo fees, add the taxes, add the liens, add the selling cost. Then look at the truth. The truth may be painful, but the truth gives you options. Waiting may give you fewer options, and what you lose by waiting can be serious. You may lose equity, you may lose credit, you may lose control, you may lose peace at home, you may lose the chance to sell on your own terms. And if the bank takes control, the decision may no longer be yours. If your story sounds like anything I described, reach out before the situation becomes urgent. We can look at the property value, mortgage payout, sale cost, and possible shortfall. Then you can decide whether to hold, refinance, sell, or create a plan with the lender. No pressure, no shame, just clear numbers. Because in this market, the goal is not to pretend everything is fine. The goal is to protect your family before the problem gets more expensive. If this video helped you, like it, subscribe, and share it with someone who may be quietly struggling with their home right now. They may not need judgment, they may need a plan. The name is Conrad. Let's meet in the next video.